Hi, I'm Linda Eedes, and I'm going to talk to you about the RECM Equity Fund, which is our local equity fund. And I'm going to highlight the management actions during the fourth quarter and also talk a little bit about how the portfolio is positioned currently. So the fourth quarter was obviously mostly influenced by the US presidential elections. Donald Trump being elected as US president came as a bit of a shock, I think, to most markets. It was very positive for the US market, which obviously on the back of the expectation of Trumponomics being very stimulatory for the US economy, saw the US equity markets performing well, but not so great for emerging market equities, and that included South Africa. So, of course, fears of heightened protectionism, less free trade, all those sort of weighed quite negatively on sentiment towards emerging markets, and South Africa obviously took part in that, and the equity markets in South Africa were down about 2% for the fourth quarter. The RECM Equity Fund, I'm happy to say, actually continued to do very well in the fourth quarter. The returns for the fourth quarter were 3.7%. And the reason for that is, of course, that the portfolio does still have quite a lot of resources exposure. Roughly about a third of the portfolio in terms of the equity allocation is still exposed towards resources. And there, with industrial metal prices having rallied with the expectations of infrastructure spending and the likes, companies like BHP Billiton, Anglo-American, businesses which have more industrial metals exposure did actually do very well in the fourth quarter. And that was really just a continuation of the trend for the year. So looking at the South African equity market as a whole, it was sort of just slightly up for the year. The ALSI delivered just over 2% for the course of 2016. But there was the same sort of extreme divergence that you've seen in prior year, but the other way around. So last year, of course, the top performer was the resources sector. Resources were up more than 30%, 34% to be precise, whereas financials were up only 5%, and in fact industrials, which had been the winners sort of in previous years, were down 7% during 2016. And of course, the RECM Equity Fund returns very closely sort of follow that trend. You'll know that we've obviously seen resources as being a sort of compelling area of value for quite some time, and the RECM Equity Fund benefited from that, as well as other areas of value which have started to unlock. And the RECM Equity Fund was in fact up 42% for 2016. So looking at the positioning of the portfolio overall, dealing first with the equity exposure, you can see that the sector exposure is still quite meaningfully tilted towards resources relative to sort of the makeup of the market. So we've just actually got under a third of resources in terms of the equity allocation. That's obviously down from what it has been historically, obviously on the back of a very strong run in that sector. We have pulled back some of the allocations where, of course, the discount to fair value has narrowed. But nonetheless, we do still think there is further value to be unlocked in that segment of the market. We have seen more of a diversification across the board. So pockets of value are sort of emerging in other areas outside of resources. And I think that's broadly a very positive trend because it means that your portfolio is less dependent on any one particular theme and the timing of that theme coming right in terms of the overall returns of the portfolio. If we actually look at the equity allocation as a whole, it's increased over the last quarter from about 80% to 87%. So obviously we still have about 13% in cash, and that's a good thing because we do still have that dry powder if you want to allocate to new ideas as they come about with volatility in the market and possibly a few more surprises. Looking at the top 10, you can see that that really is much more of a mixed bag. 2 years ago, the majority of those names would have been in the resources sector. Now we just have 3 stocks in that list, which are resource counters. That's, of course, Impala Platinum, Sasol, and Anglo Platinum. And then the rest are quite a mixture with exposure to very different parts of the market. So looking at RECM and Calibre, that in itself is, of course, quite a mixed bag. Quite a bit of gaming and leisure exposure there. Obviously benefited very nicely from its exposure to Dis-Chem, which listed during the fourth quarter. That stock has performed very, very well over the course of the year, RECM and Calibre. Of course, if you look at sort of banking exposure through Standard Bank, telecommunications exposure through MTN, you've got AstraPac, You've got, of course, Altron, which is a new investment in the fund over the fourth quarter, and then luxury goods company Richemont. So quite a mixed bag, which is quite representative of the broader portfolio as well. And I think, as I say, that is desirable. So the increase in equity allocation is not only allocating to a few of the stocks which we already held, which may have experienced a little bit of weakness, but also a couple of new investments on the local side as well. And that also kind of reflects a little bit of that broadening of the opportunity set that I've mentioned. Some of the new names in the portfolio include Altron, which is of course the technology group, which has been struggling for quite some time. It's been through a considerable restructuring exercise. There's been quite a bit of a shift from sort of a family-owned, family-controlled business towards more of an independent management structure. And we think that's a positive, and that will lead to further unlocking of value, and that at current prices, it does represent a compelling opportunity. Other new investments in the fund include Clientele. You'll know the name as being sort of the market leader in South Africa of direct sales of life insurance. The market is being a bit short-sighted, we believe, in terms of the knock-on effect on the share price. Of course, South Africa is going through a bit of a tough economic climate that is going to have a bit of a knock-on effect on the lower income segment of their market. But this is very much of a cyclical phenomenon, and we think it will obviously change as that cycle turns. And when you value that business, sort of looking through the cycle in a longer term perspective, that the current prices do represent quite a significant discount to that fundamental value of the business through those cycles. And we do also have new exposure to AECI, which is of course the chemicals and explosives manufacturer. They are quite closely linked to the sort of resources cycle. Obviously, they provide a lot of their products into that segment of the market. So obviously their fortunes are going to be linked to that cycle, which is playing through, and which obviously at current prices thus represents an opportunity in our minds. And sort of looking at the overall portfolio, you are seeing lots of interesting areas of value sort of emerging. We do still have quite a focus on SA Incorporated. We spoke about that in the last quarter. Obviously, over the few years leading up to 2016, the businesses that did very well tended to be the multinationals, the businesses which derive their revenue outside of South Africa, and that is shifting very much in favor of kind of the local businesses. Even those beaten down areas of the market, such as the construction stocks, have started to see a little bit of light at the end of the tunnel, and we have a portfolio which is really sort of positioned very well to benefit from that. So overall, the RECM Equity Fund, we think is positioned very well to continue to take advantage of that swing towards value. We think it's still very early days. We have not only got the willingness to actually invest in those value opportunities, but importantly, we've got the ability to do so. Some of the new investments which I spoke about earlier are smaller businesses, which just simply aren't available as opportunities to larger asset managers. We have a very wide opportunity set to hunt for those value opportunities, and we still have some cash to actually put to use as they arise.